Good evening. This is the video newsletter for Buy Sell Short for Tuesday, December 20th. Massive rally on Wall Street today. Going into the last 20 minutes, we were up almost 360 points. The reason for this, let's go back to yesterday. Yesterday, market looked like crap. Everything was deader than dead. We had the Dow closing under the 50-day moving average. The hammer was about to drop. There was going to be no Santa Claus rally, run for the hills. And then we had a nice little European rumor that they were arguing over the bailout fund from unnamed German sources, and that's pretty much all you needed for traders to stay out of the market. This morning, we had again, positive rumors, or not actually rumors, positive news from Europe. German economic data showing better than expected signs. And then the big deal was the Spanish debt auction. They sold more debt than they planned to at a 1.7% interest rate. Last month they paid 5% plus. So that was a big confidence booster to the market. And off to the races we went, 150 plus point gap open. Everyone on the sidelines failed to enjoy this nice little rally, and as has been the case over the last several weeks, the market just kept running, and instead of having a rally over a couple of days, they just shoot the wad and do it all in one session, 330-point gain. But the positive sign in all of this is we started seeing some very nice bounces in small caps. The January popper lists that we sent out this weekend, some very, very nice movers in that. We'll go into that a little bit later. After hours, however, we did have Oracle miss, and miss pretty good. I mean, they missed on revenue. They missed on their EPS, stock down almost 10% after hours. So even though we are likely to see a pullback tomorrow, that might be the excuse. Now, if we're able to hold up tomorrow and do what we did back in after Thanksgiving, we had a big up move, and then it continued for the next several days. So let's see if we see some follow through on that tomorrow and continued strength in the small caps. Quick mention on the Dow 15-minute chart. We're looking at getting a golden cross on the 15-minute time frame. Again, we're probably going to get a dip on this tomorrow. Again, given a 300-point up move, that's almost a given. And typically when we get a cross on the 15-minute chart, we see a dip first, and then the average gain is about 150 points. So that could take us up to that key breakout level of 12,300 is what we're going to shoot for. But the chart we're really concerned with is the RUT, Russell 2K Small Cap Index. As you can see, we are right at a breakout of this symmetrical triangle setup at 740. Now, as I've continued to say over the last several weeks, I'm not going to get real happy until we break that 200-day moving average. This is the level I'm going to be looking for as a confirmation that small caps are back. And as a side note, it's no coincidence that yesterday there was an article out saying that cash levels in the market hit a one-year high in December, and then whoop, out of the blue we get a 300-plus point rally. That is a good sign. When you see so much cash on the sidelines, it means everyone continues to be bearish. It's when cash levels are low, which they were at the market top at 13K earlier in the year. That is when you get a little bit concerned. When cash levels are really, really high, typically that tends to be a bullish thing. As for the small caps, again, we're going to be looking for that 760 break and move into January. And the economic data that's coming out, I continue to say, small caps benefit more when the economy is starting to turn. So keep that in mind. We have had so many small cap stocks washed out over the last few weeks that there are going to be some very, very nice bounces in the near term. ACPW, one of our January popper plays. As you can see, learn the setup. Heavy sell-off over the last month. Nice base action. We did get a little breakout today. We got above the 20-day exponential, but got halted at that 75-cent area. We're looking for at least a bounce back to that 50-day moving average at 89 cents. I would be picking ACPW up on dips. We added to the position today at 68 cents. Chart looks very, very nice in my opinion. Stochastics about to break up through the 50 level. I like the setup. Similar setup. AVII, as you can see, steep sell-off over the last several weeks. Nice bottoming action over the last few days. We had the CEO buy 300,000 shares on the open market at 59 cents the other day. Targets at least a move to the 20-day at 67 cents and then up to the 50-day moving average at 81. Again, deeply oversold, as you can see on stochastics, like exactly where we like to buy them, with very, very nice upside potential here. MVIS continues to bounce around at the mid 35-cent level. You know, we continue to wait on this one. Target remains the 50-day moving average, 57 cents. HSOL, solar play, as you can see, down sharply, down essentially 50% over the last month. Nice bottoming action on this one, 99-cent stops. 20-day exponential, this is a stock that loves to bounce back to its 20-day exponential, as you can see, and then if we get crazy momentum on it over the next couple of weeks, a move to the 50-day moving average in the right market environment is not out of the question. So some very nice upside risk reward on this one, especially given what peer CSIQ did today on the market. Another one that you need to add to the January popper list is IVAN, down 50% over the last month on no bad news. 20-day exponential is up there at 91 cents. That is at 20% higher. This is one I would consider starting to slowly move into over the next few days for a bounce back to that 20-day and 50-day moving average. RSI is bottomed out, and with the commodity stocks, our price is up very nicely today. And this setup, learn this setup. This is a setup we do very, very well with this time of the year. Now, a couple of the pop scan plays have started moving today. DRL, a nice little pop on this one, as you can see, same classic pattern. CSUN was another one. It was up almost 25% today with still lots of upside. So as you can see, these stocks are starting to curl at the bottom, and eventually one by one they will all go. The setup has a very nice high win rate, and with the market doing what it's been doing, and if we continue to see it hold the gains, you're going to see greed start to take over and traders really start to move into these plays. Oracle news probably puts a crimp in the market, at least initially, but tech stocks have not been that strong recently. So let's see how the market reacts to that news tomorrow on the dip, and if we get buyers and greedy buyers coming in to see what happens. So while we're not rushing into plays right now, we did buy a little bit too early a couple of weeks ago, and we're still paying for that on stocks like BNVI, which hit 24 cents on the close today. Again, just this one, 50-day moving average is at 42 cents. That's a 50% upside move. TRID is another one, has also stabilized here. So these stocks are starting to put in bottoms now. One by one, they're going to start to bounce, and that's what we're going to be waiting to pounce on. Let's see tomorrow if we have the similar action we saw in small caps today. If we start to see more and more stocks start to bounce, that will start to feed on itself. So that's what our fingers are crossed for going into the next couple of days. And let's see what happens there. If you've got any questions, feel free to send me an email, feedback@buysellshort.net. If you've got any questions on the pop scan plays, they're on the website. Look on the right-hand side, January popper scans, and you'll see the links to the PDF files. So that's it for the video. Again, I'll see you guys in chat room tomorrow. Good night.